How's it, guys? Welcome back to FX Rhapsody. It is 2023 and we are back doing some nice analysis for you, weekend analysis. And this year I want to be focusing on also getting some entries, and looking at where we can take some profits or your target areas in the market. So we will definitely be focusing more on that. And there's definitely going to be more videos coming your way. So this is the start of 2023 for me. And yeah, let's see how it goes. We are going to be looking at two currency pairs. We're going to be focusing on the British pound and Japanese yen. And then we will also be looking at the British pound US dollar. But first, before you hit the charts, just go visit my website, bottom left corner over here. Link is also in the description, where you will find an updated COT report. You can download that under the resource tab. We do use the COT reports in our analysis. I don't always use it in all the currency pairs. I want you to go and download it and see how you can, or you can use it yourself, and also for the currency pairs that you are trading. So and there's also some nice reading material on my website, and also look at the preferred brokers. These guys are absolutely brilliant when it comes to having a reliable broker behind your side. So let us hit the charts. So we're going to be starting on the British pound, Japanese yen. We're looking at 4-hour time frame and then moving on to the 1-hour time frame. So what happened this week? So this week we saw this nice we first saw a little dip in the market, British pound getting a little bit weaker against the Japanese yen. Then we saw a little bit of strengthening in the market, bulls taking over and making a nice little dip here and then up. So where is your entries on, or where is a nice entry on the British pound Japanese 4-hour? We can see that if you take your Fibonacci tool, you take it from the swing low to that swing high. And obviously, like I've always done before, that is a brilliant area in the market. The 62% area, pullback, nice little spike up there. Also, I'm just going to take this out. So if you zoom in a little bit, where we can see a nice little entry as well, and just confirmation of this, I'm just going to put this back in. So this is the first one. Second confirmation is you can see this nice little fair value gap that forms in the market right there in between these two candles. You had a nice little break of structure, basically right about there, and then whoops, that's a bit skew and skew again. So you see a nice little fair value gap in the market with this with this confirmation of a nice retracement, so price pulling back to that area. So you have that fair value gap, you have a Fibonacci retracement, and then what you have is also a nice little, if you had to enter right about there, you had a nice little 300 and something pips in profit on the 4-hour time frame. Now this year are also going to be talking a lot more about taking the pips. Don't worry about the money that you're going to be making in the Forex, trading, because there's so many guys out there. Just if you look at your social media, I'm not a big fan of social media, but if you look at social media, there's so many different guys just wanting to show people how they trade and do this and do that, and they show all these profits. And trading is not about the profits, guys. If you start looking at trading as a quick money-making scheme, it's not going to work. You are going to be losing a lot of money. So focus this year on getting pips in your bag. Doesn't matter of the amount that you trade, the lot sizes, or whatever contract you're trading. Focus on your entries and the amount of pips you can take out of your entries. And that is how you're going to grow your trading. And then eventually, yes, the money will come. But focus on entries, getting those entries right, getting those targets where you can take your targets or take your profits, and then you will see how eventually you will get better and better in trading. So with this entry, you had an entry right about here, and then your target would have been, this area for me. Okay, so we had a nice little high before. So we had a high in the market, price not pushing past that. You had a price pulling and then pulling back, closing below that area. So that is a nice little structure in the area in the market. So if you had an entry over here, your target would have been this area over here. Okay, that is where price is going to push towards, because you have got liquidity lying up here. So price action going to take out that liquidity. All right, so that is a nice little entry on the 4-hour time frame. Now with this movement up, let's look at the 1-hour time frame. let's see if there were any more entries if you were, you know, drilling down to your 1 hour. So as we can see, I'm just zooming out a little bit. Oh, there we go, in. So this is this big movement upwards that we saw in the 4-hour time frame, and we waited for the, if you were only trading 4-hour time frame, this is the entry right about here. Okay, this was your entry on the 4-hour time frame on that section for that pullback and then pushing up. But you could have had a nice little entry with this huge movement to the upside. So what we have here is, again, we have an area in the market that price, there we go. So that's an area in the market that price just did not break. And actually you can just push it down to here. So price not breaking that area, pushing past it, but pulling back again. You're closing below that area every single time. Then you had a nice bullish candle pushing through that area. Okay, so breaking that structure. And with that break in structure, you can see a nice little fair value gap that was created in the market. So you have got that area pushing through and then pulling back. And that's a nice little entry that you could have taken with this price pulling back into that area. So you can also take for another confirmation, you had a swing low right about there and a swing high. So again, two confirmations. You had a swing low, as you can see, price pushing through that structure area, creating a nice little bearish candle, but the bearish candle went up and then pulling back a little bit. So you had a swing high, and then price opened here and then pulling back into that 62% area, as you can see. And that is where you enter your trade. So that is another entry that you could have taken. Just zooming out a little bit. So that is the entry you could have had on this, let's call it right about there. A nice little 300 odd pips that you could have taken up. Where is your exit area if you had to take that trade? Your exit area, if you zoom out a little bit, is obviously these highs over here. Okay, just gonna do that right about there. Okay, this is the area in the market that price came towards. Okay, you can see price not pushing through that area, and eventually that is, so your entry is right about this area over here, and then price action hunts those liquidity areas that's on the top. Okay, so that is your exit area in the market. So what we're currently looking at is, again, taking that out, pushing that in here, pulling that line. So we have got another high in the market. So are we going to see liquidity pushing through that high? Okay, only time will tell. We will have to look and see what's happening in the market this week, but we're going to be focusing on this area in the market, and then we're going to be looking at that low. So we want to see price breaking above this area, and then obviously taking out the liquidity and see if price is just going to carry on upwards, or if price is going to start pulling back again a little bit more. So take action when the market gives you an opportunity, right? So that is basically how I also trade. Don't just predict the markets, react to what the market gives you. So we're going to be moving on to our next currency pair. We're looking at the British pound Japanese yen, British pound US dollar. We're looking at the 4-hour time frame. Just zooming out a little bit. There we go. Okay, so the 4-hour time frame, we see a nice push up in the market, pull back, and then a little bit of movement upwards again. Okay, this is now 4-hour time frame. For the guys that's only trading on 4-hour, you do get them. You do get guys only trading on the higher time frames. Okay, you've got two opportunities. So basically, what we have here is an area in the market, as you can see right there, that price broke. It's a structure area in the market. Okay, price broke through that with a big bullish candle pushing up. With that candle, it creates a fair value gap in the market. Okay, that is the area in the market that it creates. Just pulling in my Fibonacci over here because I want to just get my, just moving it up a little bit. There we go. So I just want to get my halfway mark, or the halfway, or the center of that little block. And as you can see, zooming in, how price goes and touches that area in the market, and that is where your entry will be, right about there. Okay, so that is your entry area in the market. If you had, or if you wanted more confirmation on this little trade, you zoom out a little bit more. So what you see is price going up, it creates a swing low, then pushing up in the swing high. Okay, so you have a Fibonacci from this area, the tip of that candle wick, to the tip of that candle wick. So it's a swing low, and you have a swing high, price retracing back to the 62% area. Look at that. Okay, just past that 62% area, we take this line out. So price just pushing past it, and that is again confirmation of a entry. So you have got two confirmations. You've got your Fibonacci confirmation, you have got your price action fair value gap confirmation, and that is again a nice little entry, price pushing up towards it. Where's your exit area in this mark, or in this trade? If you had to take that trade from here and it went up, I would have had my exit area, or my target, my first target area, about there. Okay, the reason for that is again market price pushing up, creating a structure in the market. Yes, price went past it, but came back, it closed below that area. So you have that two candles, as you can see, price not pushing past it. So that is going to be my area that I want price to go and hunt liquidity areas. So that is the area that I'm taking target first, or that's my profit taking area, my first profit taking area. So once price pushed past it, you take profit. You can take partial, you can take all of it. It's really all up to you. Again, this year, it's going to be all about taking or getting pips in your bag. That is about 78 to almost 80 pips. Getting pips in your bag, that is what you want. Forget about the money. Forget about the millions everybody claims to make. Okay, forget about that. Get your trading up to speed. Get comfortable with your trading. And as soon as you get comfortable in your trading, then you're going to see the money coming. Right, drilling down to the 1 hour time frame, really a couple of entries that you could have taken this week. So basically we had a nice little area in the market here. So I'm just going to highlight this and this. So that is basically a nice consolidation area in the market. It's also where the market, or where price or the market opened this week. So what happened was we had a nice break of structure. Okay, we had a nice area in the market. I'm just going to push this up here. So nice bullish candle. Okay, bullish candle, smearing it up, just pushing through that area. What happens when, or what does this create? It creates a fair value gap in the market. Every time you see a nice bullish candle or bearish candle, you highlight these imbalances in the market right there. Check there. Okay, that is a nice little entry in the market. Right, so if you had to miss this area, okay, this one over here, okay, if you had to miss that, you take your Fibonacci from this low to that swing high. Okay, so you have a swing low. This is your first entry, but you can see price going up, coming down, creating another high, creating another low. Right, so it's a swing low, swing high. Okay, just taking this out, taking that out, price coming back to your 62% area. Just going to highlight that. Okay, nice little entry again that you could have taken right about here, and then price coming, retesting that area again, and then pushing up. Okay, so that's two entries that you could have taken, and you could have had this nice little push up to the upside. And then the obvious, then we have on the 4 hour time frame. I'm just going to highlight this area here. Okay, so after that area, I'm just going to take all of this out, otherwise it gets a bit confusing. Please don't do too many indicators, too many lines, anything in your chart. Try and keep your charts clean, guys. It is really important, otherwise you get confused. So after that entry, if you had to miss that, you had another nice swing low, swing high, retracing back to the 62%, you know, right there. Okay, nice little entry again, and that is also more or less an entry on the 4 hour time frame. So guys, that's a couple of entries that you could have taken, two currency pairs, lots of pips in the bag. Excuse me, if you had to follow that. So what we're looking at this week is we have got this high over here that I'm focusing on. Okay, that's a bigger high. Okay, so we have got that high, and then we have got this low. It's a nice big area in the market, but I want to see price breaking past this. I want to see if there's any movement up or down, okay, to see where price is going. Because if we look at the COT reports, okay, I didn't look at the COT reports on the previous one, but I mean, this is why I want you to go and download it so you can use it by yourself. So what we see is the British pound did strengthen a lot, then it got weaker again. But you know, this last week we saw a lot of shorts being open to the market and more long. So price, price is just up and down the whole time. Okay, but I can feel that the British pound is getting a little bit stronger. So I don't want to be biased, but we might see a little bit of break beyond this point. If that happens, we react to the market and then we trade accordingly. If price goes down and it breaks this one, again, we react to what the market gives us. So guys, that's all from my side. I hope you enjoyed this analysis, and if you did, don't forget to hit that like button, hit the subscribe button, hit the notification bell. Show me some love by hitting that super thanks button. And yes, I'm glad I'm back, and I hope you guys are glad I'm back. Leave your comment in the comment section. Just let me know what you guys think and what else you want me to do or teach you or show you on the trading side of things. And yeah, let's have a wonderful year, guys. There's more videos coming your way this weekend. So guys, stay tuned. Hit that notification bell for those videos coming. Guys, I hope you've been having a wonderful weekend. Stay safe and happy trading, guys.